Welcome to another episode of Phillip Trading Podcast. My name is William, and today we have our speaker here is Mr. Bong Jeen Hao from the Street Finance. Okay, so Jeen Hao has been trading the capital market for more than 10 years now and has been very popular in the social media with his trend following strategy. So today we will talk about investing versus trading because a lot of traders they tend to turn a trading position into a long-term investing position after the stock they buy turn into a downtrend. I think this is one of the most of the mistakes that most of the traders actually make when they are trying to trade. So we think that it's really important to understand the purpose before we actually enter a position. So before we start the topic today, Jeen, how have you been?
I'm great.
Great.
Market has been doing quite okay.
Yeah, okay. So you are great because market has been doing quite okay. Okay, good to hear that. Okay, so before we move on, can you just briefly explain to us what is the main difference between investing and trading?
All right, so that's actually a great question. So to me, the primary difference is the intention. A lot of people might not agree with me, but this is how I define investing and trading. Now, as far as investing is concerned, many people would think that as long as your holding period is long enough, and then different people might define long differently, but a lot of people think that when the holding period is long enough, then you are investing in a company. Now, to me, this is not really that true. Investing is all about buying into a company with a list of reasons or criteria that the investor defines and then hold until these reasons are no longer valid or no longer intact. You see, the legendary investor Warren Buffett does not sell his, for example, Coke shares just because he made a lot of money from it or the company's share price has gone up a lot. In fact, he's still holding those shares because the reasons for him to invest is still there, is still intact. Therefore, he stay invested. So it's not about holding long term. It's about the intention, in my opinion. Now, as far as trading is concerned, the intention would be buying a company's stock with the intention of selling the stocks with a higher price in the future. Now, it doesn't matter you sell it within an hour or a week or a month or maybe even years. This is not what I made up. This is how it is explained by Michael Koval, the author of the book Trend Following, which is the strategy I personally use most of the time as far as, I talk about trading. Now, so for example, if you buy a company's stocks, because the company will have some, expansion plans and things along those lines that would probably drive the stock price up in the near future. Your primary intention here is actually to earn the capital gain. So after a year or two, the stock price, for example, the stock price surge, and then you sell the stock for a nice capital gain. Now you are technically still trading as well because you buy with the intention to sell at a higher price in the future. So just that you hold longer doesn't mean that you are investing. Okay, just that just because you hold longer than most traders out there, and the choices of analysis can be different compared to other traders, that doesn't mean that you are actually investing. So some might be using technical analysis, for example, as far as trading is concerned. Now, some might be following news or even using fundamental analysis and so on. So to me, the answer would be it depends on the intention.
Okay. So it's the intention that differentiate between investing and trading. Okay.
So, yeah, that's right.
So after we know our intention, how do we know that we are more suitable, the investors or the traders are more suitable to be an investor or to be a trader, whether they should hold their position for a longer period or whether they should just keep it short? Like, how do they know they are more suitable for which method?
All right, so one thing that I think many would understand is that at the most generic level, trading has the potential to generate higher return as compared to investing. while at the same time, the amount of effort and commitment that one has to put in, trading, like for example, analyzing stocks and finding trading ideas, are making trading to require much more effort in general. I think a lot of people would agree with this and understand this. Now, granted, you can manage to find a great mix between your risk reward ratio and winning rates, then trading can be more profitable. Now, with all this being said, there is definitely a learning curve associated with learning. I think those who have been trading in the market, be it like stocks or futures or whatever, I think most people can resonate with this. So investing, on the other hand, is more like an accumulation game or wealth accumulation, if you will. Now, it doesn't require monitoring during trading hours like some traders do, but this doesn't mean you don't have to put any effort anywhere. It's not like free money, put there, do nothing. You still have to do a lot of like homework. Just that the school of thoughts when it comes to the analysis can be very different. Now, in my opinion, the true power of long-term investing is compounding. Right. This is like what Warren Buffett has said, and a lot of people out there know already. It's a process of accumulating wealth, in my opinion, and growing your portfolio with compounding returns. So back to the question, whether you are more suitable to become an investor or a trader, it much depends on a few things. Now, first, I would say, can you keep contributing, as in adding more capital into your portfolio? Then I would say both investing and trading would be great. But if you have an allocated capital and you do not, foresee yourself to commit more capital progressively, sometimes trading might be a better choice, especially when your capital is not a lot. Imagine you only have like 10,000 sitting there and you cannot commit more into your portfolio. Now, imagine that you invest this 10,000 ringgit into a stock that gives you like 8% dividend, which is not too bad, 8% dividend. But 8% of a 10,000 is just like 800 ringgit. Like, after you stay invested for a year, all you get is 800 ringgit. Now, 8% dividend is great, but when it is being converted into the dollar term or ringgit term, it's nothing life-changing or nothing groundbreaking. So that's the thing that I think you have to concern before you decide whether or not you should go the route of like trading or investing. Now, second, do you have the time or the time luxury to monitor the market, or do you think that you can commit the required effort to be a trader? Because we all know that trader, there are a lot of not only knowledge but also time commitment into it. The shorter term you go, I would say, the more busy you're going to be, because you need to monitor the trades, like having like few computers. Some people would do that, okay, and find new trading ideas progressively and things along those lines. Now, if you're the type of person who often say, oh, I have no time, okay, I have a 9 to 5 job, okay, I always have OT, no time at home, when I reach home, I have kids to take care of, things like that, then trading is probably not something that you want to commit. Okay, you might want to explore more on the investing side. And the third thing I would say is going back to the intention. So are you looking to accumulate wealth via building a portfolio that can be managed almost like passively? Or are you looking into earning that juicy capital gains that many people are bragging about? So those are the questions that one has to ask himself or herself. Now, I also want to add something here. I might sound like trading is more superior than investing, depending on how you digest the information I just shared. But mind you, investing can be very profitable as well, especially when it is done right and you have a proper game plan and you commit into it. Okay, an investor who succeed are people who have a game plan and they commit to the plan. Like during the market crash that we have seen lately, they keep accumulating some great stocks or ETFs progressively based on the budget and the capital that they can commit strategically. It's not like, oh, market drop, all in. Okay, when you have a game plan, okay, you know what you're doing, then investing can be very profitable as well.
Okay.
Yeah.
Yeah. So basically, to summarize, it really depends on your time commitment and the amount of money that you are able to constantly pump into the market to determine whether you are more suitable
Yeah.
to be investor or trader, and also the size of your capital. Okay.
Yeah, and also I think you have also have to communicate with yourself. Like, okay, some people say I want a juicy return. I
Mm,
understand that I have to commit in monitoring, and you as a trader right now or trader wannabe, you have to promise yourself that I'm gonna make it. I'm gonna do it. I'm gonna commit like at least 15 minutes to half an hour every single day to look through the stock market, look through the charts, find trading ideas, and analyze everything. Okay, whatever your workflow is. I think a lot of people also have to remember that you have to commit it. You have to promise yourself.
mm.
Yeah.
Yeah, true, true. Okay, so one last question for you, Jin Hao. Since we have been talking about these two, can we do it together? Do you have any solution uh, to find a balance between these two?
All right. So, okay, there are a couple of ways to look at it. The first one is, of course, you can have two different portfolios. Very straightforward. So one for investing and one for trading. So when the market is like bearish, you have a game plan to buy stocks and ETFs that you want to accumulate at a bargain, I would say. And when the market is active and bullish, again, like probably like the timing right now, you can focus more on trading for more capital gain and knowing that your investment portfolio would also do well because the market is going up right now. So that's actually is one of the solutions. Now, another solution might be, the person or you do not have the ability to keep committing or adding new capital or new funds. You need to trade in order to grow the capital, but you might not have the time luxury to monitor the market and trade short term. Then you might also want to consider trading that is less speculative or a little bit more towards the midterm to long term. Okay. And with this, you do not need to spend time monitoring the market. Okay. Meaning that your trades, your entry and exit might not be as time sensitive. And of course, you still have to do some analysis and find trading ideas and things along those lines. But the frequency is a lot less compared to short-term trading or even like scalping or day trading. And also over the long run, if you trade for the midterm, things like that, you're going to spend less in commissions compared to those who have higher trading frequency. And just like some people, if you are not good in short-term trading and you force yourself to do short-term trading, it's like you pay more commission for nothing, right? It's also not a good thing. Eventually, your capital will dry up. So the strategy that I personally adopt is called trend following, like what William has just mentioned during the introduction, which means we follow the trend until it bends. So if the trend lasts for a week, we will close the position after a week. If the trend is strong and lasts for like 6 months or 9 months or sometimes even a year, we close the position after the trend has is gone. So in fact, I'm going to speak for Phillip Capital in an upcoming webinar, I believe, okay, about this very specific strategy. More importantly, how you can get started with trend following strategies and profiting from big trends, including some strategic action plan that even new traders, aspiring traders can follow as well. So yeah, that I believe I can share more during that webinar because I think the podcast is a bit getting too long.
Okay, okay.
Yeah.
Thanks for your sharing today, Jing Hao. So once again, if you want to find out, because Bong Jeen Hao mentioned something very interesting, which is the hybrid. You only sell when the trend changes, and a lot of people, they don't know when the trend change. Okay, so if you want to learn how to identify the
Exactly.
trend and when the trend change, join us on our upcoming webinar on the 26th of August. Okay, which is very just like 10 days away. Okay, 26 one more week away. Okay, you can join. You can find the registration link from our website at phillip.com.my. Alternative, you just drop us a message in our Facebook comment and we will help you to register. Okay, I think that is all for today's podcast, and thank you again, and I hope I can see you again next time.
Yeah, sure. I'll be seeing you guys again. Thanks, William.
Yeah, thank you.